Hello traders, John Hyaden here with a daily revision. We are starting another trading week, so let us begin. Before we start, I suggest you stop the video and read the general risk warning. It is very important for your knowledge. As always, I will start with upcoming events. All events are taking place in GMT hours. I recommend you write down the events in your calendar so you would be able to trade and notice them before and after the announcement. Not a lot is expected for the beginning of the week. The market is mainly reacting now to the announcements on Friday, which were way better than expected. Today focus will be on the Eurogroup meeting and the FOMC member, which will give further hints on the expected monetary policy for both the US and Europe. Look for trades after the announcement. Good opportunities on pairs such dollar, Swiss franc, pound and euro will be available for you guys. US market last Friday was one of the most important trading sessions in the past few months after all eyes were headed to the unemployment rate and non-farm payrolls reports. The results were unexpected as both drop in unemployment rate to 5% and the increase in non-farm payrolls by 271,000 new jobs made investors believe we should see higher rate next month. After all, Janet Yellen, the Fed's chairman, said in her past speech that the only thing that separates us from higher rate is strong US data. She definitely got that. The results made 70% of the investors believe on a rate hike. However, what does it really mean? Well, as we all know from past experience and according to analysts, higher interest rate means you will pay more for the money you borrow. Therefore, less spending, less investment in stock market, and safer assets like bonds can be more interesting. Or in other words, money will be pulled out of the stock market. But for us, it doesn't really matter which side the market goes, downward, upward. As long as we have a direction, we can build a strategy. In conclusion, it is too early to decide what will happen next month with the interest rate. Everything is still under speculation. However, this speculation or prediction may set the future direction, so with some help from the technical analysis, we can see that the big indices are now facing a resistance level, which may be the right indicator to tell us a drop is ahead of us. Short-term trades in favor with the sellers will be a better advice, since big money will try to get rid of his possessions in higher prices in order to spread his risks. Commodities, gold. The gold continued its rally movement downward on Friday. Since traders now feel more confident, we should see higher interest rate next month. However, after dropping for almost 21 days, the falling trend stopped today in early session due to China's plans to keep stimulating the economy after poor trading figures. The bounce, according to analysts, is not going to last long, and the downward trend for the precious metals should continue. It is only a small correction. As you can see in the graph below, this is the gold daily chart. After a huge rally downward, we might face a small correction here towards the resistance area, but at the end the downward trend should continue. Crude oil, the price of oil dropped last week hardly due to greater US oil production and other factors like the fear from ongoing global surplus of oil after the Kingdom of Saudi Arabia said they have no intention to stop drilling. The commodity bounced today like the gold after China poor trading figure hints we should see more EAs in plans to stimulate their economy ahead of us. However, unlike the gold, the oil is very close to a strong support area, thus analysts expect the price to balance and return properly to higher numbers. A break of this level will cause a greater drop. US dollar index. Due to the strong results on Friday from both unemployment and non-farm payrolls, the dollar reached 7-month high last week, leading to a stronger upward trend which is not expected to stop. Today we opened with a little pullback downward as investors took some of their profits out from Friday. However, as long as expectation for higher rates for interest rate is still on the line, the dollar should not stop from reaching higher highs. As you can see below, this is the US dollar index, which is basically the dollar against the other 6 major currencies. We broke the trend line over here, we broke the last resistance, and we're now heading toward the next resistance level here with a very strong upward movement. That's it for today, guys. If you have any question, you can contact me on binaryoptionsreviews@gmail.com, and I'll see you again tomorrow.